these are the advices that I would give myself if I got started all over again. So first of all, you want to look for a broker. You want to get a broker to trade with. So I would recommend you use FTMO. FTMO is a trading prop firm. But now you can go there, create an account. Then you go and take a demo challenge. You feel me? Take a demo challenge. There are a set of rules that you have to follow. And these rules will help you. If you just go on a regular broker and take a demo account, you can even enter there and risk everything on a single trade. You feel me? Nothing is going to like make you feel a type, or like nothing's going to prompt you to feel like you owe anybody anything or any explanation. But if you go on this prop firm and take this demo account, this ftmo.com, you get a demo account. They're going to give you rules like the minimum drawdown rules, the minimum trading days, the maximum drawdown rules, the profit targets. All of these rules are going to like give you this discipline. Like you just feel like you have an obligation. You feel me? You have an assignment. So it's good because it's going to force you to work. So after doing that, you want to come on here on your charts. This is TradingView. It's a free charting platform. You just open TradingView, go on the chart, type whatever stock, big stock, indices, crypto, or Forex. In my case, this is Forex. You just open the chart here, and there are tools here that you can use to analyze the charts. So right now, when you open your charts, how do you trade? How do you take a first trade? You go right here. This is what I do, and this is how I trade the markets right now. I look for levels in the market that have been formed and broken with impulse, meaning if a price has rejected a particular level in the market impulsively, I'll pay attention to that level so I can trade from it next time the price gets there again. So to cut the long story short, I trade support and resistance. You get me? Okay, now let me just illustrate to you right now what I'm trying to say. So here we have resistance. All right. Resistance is a key level above price, and support is key level below price, meaning resistance, you sell a resistance and you buy a support. And before I start, okay, there is two types of, market. There's three types of market structure. You have the bearish market. This is what the bearish market looks like. So as a complete beginner, you just have to have this image in your head, knowing that this is how the market moves. The market does not just move in one single line. Like this is what the market actually does. You feel me? The market moves like this. So you have a downtrend, you have an uptrend, and you have a consolidating market. Okay. So this is an example of an uptrend. I'm sorry, it looks like shit, but I really hope you understand. This is an uptrend. Okay. So how do I trade right now? This is an uptrend. Let me just add the other one. And this is a consolidating market. This is a consolidating market. The market is bouncing up, bouncing down, same levels, bouncing up, bouncing down until it eventually breaks one way or the other. Okay, one direction, either up or down, whatever. So these are the three market, conditions. These are the three market structures. Bearish. You can see here, this is bearish. Okay, and this is what? Consolidating or ranging market, meaning price is not heading high or low, it's just bouncing up and down in the middle. Then this is a bullish market. I'm sorry guys, this thing's supposed to be like this. This is a bullish market. This is a buying market. So what you want to do is, in this market condition, you want to be selling. In the bearish market condition, you want to be selling. In the bullish market condition, you want to be buying. Okay, if the market is trending upward, you want to be looking for buys. In a ranging market, you can look for both buys and sells. So now let me just walk you through my examples. Right here, we have resistance. Why is this resistance? If you ask me why is this resistance, I'll not say, oh, it's because the price has rejected that area. Price rejects nearly everywhere in the market because, I mean, you cannot really tell. But I have several reasons why this is resistance. And my first reason is, this is resistance because this resistance took out the previous high. It is resistance because this high has produced a low, which is lower than the previous low, meaning market has shifted structure to what? Bearish. Telling me that there's more sellers in the market than buyers, because I just believe in my own person. I don't care how it is, okay? I don't care how it is. I just do it the way I believe, and it works. So I just think this market remains bullish until this low here gets taken out. So if this high has the capabilities of sweeping this low, this to me is a bearish market. You feel me? And I'll be looking to sell the next time the market comes here. And if the market reaches this level and sells off again and still takes out this structure, then I'll still be interested in selling there. You feel me? I'll still be interested in selling there and here too. But now in this case, the market failed to break down here. And when I see that this high, this recent swing here did not, this low, right? It's not lower than this low. I won't enter another trade here. Meaning I'll just trade this key level once and I'll see. I'll wait for this key level now to break. You feel me? Okay. Now I want to tell you something again about support and resistance. Like I told you, right? You have to identify key levels that the market has, pushed away from impulsively. When I say impulsively, I mean like you see this powerful push, these big candles like this, pushing the market in one particular direction for a period of time before start continuing its normal thing. This is a very big move, and this is oftenly what considered resistance. But there are a set of rules that I guide myself with when marking my zones and calling if a zone to me, in quotes, right? If this zone is considered resistance, it should follow these rules. And what are the rules? My resistance zones must break structure, like I told you. My resistance zones should be able to sweep previous highs before breaking structure, like I told you. That's 2. My resistance zones should not be located where they're equal highs. Okay, let me take you back. If you're in a rush, click away. I don't sell courses. I don't sell knowledge. Everything that I'm doing here, I'm putting it out for free. Okay, so if you want to click away, just do it. I take my time and I do these videos for people that want to watch. So right here we have this high, right? You saw that there was another high before this one. So this high swept every other high. It broke the previous highs. Then did what? Took out these lows. So if I just appear, if I just come on the charts now, and this is all I can see from here, this is all I'm seeing. This new high has produced a new low. I'll be looking to sell here. Because why? I have resistance. So if the price walks in back there, I would gladly sell it. But when I sold this market the first time, this low did not break this low. It did not, meaning my rules have not been met. I have no reason to trade this level again. It is my own personal idea. It's not like it's something or it's the way they trade the market. No, I'm not saying this is the way they trade the market. I'm not a professional trader. People that join me here, work with me here, is because they believe in what I do. And so I just do my thing my way. Feel me? So this high here is not resistance to me because this high has not taken out these highs here. To me, these highs are all equal highs. And when I see this, I see money because this is all liquidity. When the market will rally up, it's going to sweep everybody here eventually. But now you don't know when. So that's why I want to stay away when I see that, when I see structures like this. Like I just demonstrated that, I showed you now. Higher highs, higher lows. Now uptrend. You don't want to be in an uptrend selling. Feel me? So here, I was selling here because why? I had a higher high and I had a lower low. Higher high, lower low. Shifting the market structure, the market sense, as shifting the market structure from bullish to bearish. The market trend has shifted. So that's why I'm selling here. So now if I wanted to consider this a good key level for me to sell from next time, this key level has actually met 2 of my rules. Why? It has impulse, 1. 2, it has taken out structure, but it has not met the 3rd rule, and which is the most important rule for me. I wanted this high to be something like this. Jiggy, 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 then bam, like this, then bam. You see this? This is liquidity grab. You see this? If this high did this, sweep all of these other highs here, right? Then bro, that's definitely an area I'll be looking to sell from. So I will not look to sell here. Good. What I will look to do now, if this market has done this and broken like this, instead of me looking to sell here as resistance, I'm looking for a break and a retest of any of these zones. 1, 2, 3. How will I do it? First of all, draw my Fibonacci. I'll measure my swing from this high to this low. Okay. I'll measure my swing like this. Oh, guys, I'm sorry. This thing is just blocking my vision. Okay. I'll measure my swing like this. I look for the midpoint, which is this area. Okay. So what you want to do is you're trying to sell this market as high as possible. You want to be selling at a very high price. So above this 50%, this is the zone. This is inside here, inside this price, like inside this area. I'm looking for sales. So if you look across here, 50%, we have a key level. Up here, we still have another key level. Here we have another key level. So if you've watched my previous videos, you're going to know exactly which level to trade from. It is this one. I'll trade from this level because why? We have 3 levels here. I'll look for one level to trade from, and it's this one. Because why? This is the last low that put the high that broke structure. You feel me? Important people enter here, push this market up, then collapse the market down. That means making people to enter the buy trade here or whatever. I don't know the explanation, whatever explanation it is. I don't care about explanations. I just want to get it right. So this low is the last low before the disaster happened rather. So this is my key level. I'm looking to take a retest here. It is inside the premium level, 1, and it's high enough for me to grab a sell there. So I'm looking to sell there. You feel me? I'm just saying, if I'm to trade this price leg, that is exactly how I'm going to trade it. Okay, now let me tell you why this high here is not good. Let me just show you an example real quick. You see that since there's liquidity lying here, like I told you, equal highs in the market is called liquidity. Equal lows is called what? Liquidity. Even trend lines, they are all liquidity. Meaning these big institutions know exactly where you people are entering, knows exactly where we enter the trade, where we exit. And they know that where there are equal highs and lows, people are selling and buying there. So what they'll do is they'll run the market to your stop losses. Stop you, I'll take your money, then sell to you or buy from you. You feel me? That's exactly how it works. So you see here, we grab one successful trade, this trade. And this is how I enter my trade. I use sell limit, okay? If I see like a sell setup, I identify my key level right here. I'm just placing a sell limit right there. A sell limit, meaning I just go place a sell limit. I don't do market execution unless I have to, but I'll place a sell limit. My stop loss will just be above this high because the previous high is not really that much. Then I'm looking for 1:2. 1:2 in the market. 2 meaning we're leaving this trade as early as possible. Like we don't even need all of this. Just look at that. This is very, very realistic. The reason why I say it's realistic is because when you look to stay long in the market, you end up with more break-even trades and more losing trades. The way you enter early and get out. You see these people they call banks and all of these hedge funds and big guys, right? People think maybe they're taking one entire swing before they make millions. These guys take like 2 candles in the market and get out, and that's it. They're good for the month. I swear. They just enter the market, they just click one button, buy, blink twice, close it, bam, they're out. But you're here trying to catch an entire swing. What are you, Tarzan? You cannot do that, bro. So you feel me? 1:2 is very, very realistic. You get 1:2 here, the next trade you compound your profits, compound it, you're going to grow either ways. 1:1 is even better, but I just prefer 1:2 because I don't see any sense trading back and forth. So if I take a loss now, pap, I'm still up one hour. So it just depends. And I risk 1% of my entire trading capital per trade. So that's what I do. I'm not telling you should go and do that. Risk whatever you want. If you want to risk 99% of your capital, it's your money, bro. My mission here is to share technical analysis with you, my technical analysis. So you should do what you're doing. Feel me? Okay. Now, like I told you why this level didn't hold, right? Okay. Let me see if I can identify a level that I can call resistance, or I can say, oh, this level I can trade it. You see that this level got here rejected, right? Rejected down. Is there impulse in this move? No. Did it take any low? No. Why should we sell here? This is just a pullback in an uptrend. You have pullback phases, like the market moves in higher highs and higher lows. It pulls back. So this is a pullback. There's no way you call this resistance, bro. This is just a pullback. If this thing took out this low, then okay, that's resistance. People come and be like, oh, draw levels in the market that's rejected. Yeah, you can draw this when you're trading break and retest. The support and resistance is different. Okay, break and retest of horizontal levels is different. You should be trading that in internal structures. But the extreme swing points, bro, I don't know. There's just a lot to say. But I cannot say it all in this video. So I'll just be doing these videos one by one. So I think you should subscribe if you ask me. I suggest you do subscribe. Turn on the notification bell because I have to tell you everything I know, and I'll tell you everything I know. Okay? Good. Okay, now we have it there, right? That level broke. Went above. Yeah. It's just like that. Let me look for a good price area. You can see market just came here consolidating. At this point, it should probably be maybe go to the beach, go swimming. There's nothing you can do here, man. You just enter here, losing your entire capital. Yeah, now you see the market breaking structure to the downside. Bam, new low. Bam, broke again to the downside. So how do you trade this? How do you trade this? Now you're in this trade. How do you enter and take this trade down? If you know, okay, if you feel like the trade is going down, how can you ride the trend down? First of all, you measure the swing. First of all, you measure the swing. Bam. High to the low. New high to the new low, right? Where you see the market starts pulling back, you measure high to low. Where's the midpoint? Here. So you want to be selling inside here. Where's your key level? This is my key level. I highlight this last black candle before the push and the break, right? I just take that. That's my key level. Let me delete this thing. That's my key level. I'm looking to sell there because that's the only key level available here. You feel me? Aside that, it's just the best key level I can trade from. So the market pulls back, tries to go in there, did something. When it stays this long, realistically, if I'm trading a live market, I cannot wait for this thing. When I see consolidating way too much like this, you have to understand that each time the market consolidates for a while, it usually breaks impulsively towards like in one direction, right? If you've noticed, you see consolidation, bam, spike. So that's called accumulation and distribution. The market accumulates orders, accumulates them, then bam, with all that money, it gives a lot of volume to the market. So when I see all of this noise like this, I just delete my order. Whatever sell limit I have there, I delete it. I think I don't want to trade it. I don't want to be involved, or I don't want to be in that market. You feel me? You can see that this level had it had a reaction here. This key level withdrew. It tapped here. I don't know if we're taking 1 to 2, we're going to make it. I don't know. Maybe, or maybe it would have ended a break even. But either way, we had a reaction that we're expecting. So now we come here. Bam. This is tap, reject. Then we have this low that took out structure, but now this low is kind of equal to this low. So I don't really think that to me is support. So all of this is not support. It's not support. To me, these are levels in the market. And these levels, how do I trade them? I wait for these levels to break and retest so I can buy them. Okay, now I'm also going to show you how to add, extra confluence to your trade. You feel me? Let's say you have a trade, you have a setup, and you don't really know exactly where the market is heading. The extra confluence that I'm going to give you is you should come back and rewatch this video. Okay? Save this video. Watch it again until it enters your fixed core and sticks inside. So you should do that. It's very important. This is a breakdown that I sent inside inside the Telegram channel. I sent this breakdown. It's not a trading signal. Okay, it's not a signal. This is just a chart breakdown that I did. I said this is what I'm looking at. So if you're in the Telegram, yeah, the link is down below. You can join. It's free. I just post everything there. However, if you want the paid, if you want the paid version, like if you want to join the close friends group, there, the mission of that group or the objective of that group, I created this group a few days ago. I think it's after yesterday. I created this group. So in this group, I share my trading signal. I share my trades with these people. Like if I have a trade now, right? I just go in there, sell, stop loss, this, target, that. So it's a signal group. So you get in there, you pay, it's a monthly subscription. You subscribe for a month. Inside that month, every single trade that I take personally, I put it there in the paid membership, okay? For the Telegram, for the free side of the Telegram, I just share setups like this. Like I just break down charts, just break down stuff, put it there, and yeah. So if you look to, if you're not somebody, if you have the ability to conceive all of this information, digest it, and try to trade for yourself, because I'm literally giving you everything here. You can just watch these videos and start. But if you feel like you're not ready for all of this, then you should probably look for the paid version of this shit. Join the Telegram, the paid Telegram, and get signals. Just deposit money in your account and let's risk it all together. If I lose, you lose. That's the bad thing about this thing. I lose, you lose. So you have to be ready for all that. Okay, link is down below, right? So if you want to join the paid paid Telegram, click the Telegram link below. Go to the free Telegram. There's a pinned message. the pink message just above there. You just click the pink message, you read it, then you see one tiny link there. You click it and message me directly. Then I'll give you direct access. Okay, let's go. Right now, this is the breakdown that I did. Okay, why did I analyze this chart like why am I looking for sales here? First of all, you can see that we have highs here. We have highs here, right? What did I tell you about equal highs in the market? These equal highs have been swept. Either way, at one point, it's not like they're being swept every time, but at one point they're going to get swept. But now we don't know exactly when. You feel me? Like here we had 1, 2, 3 touches, and the fourth touch broke. Here we had 1, 2, and the third touch broke. But now you don't know exactly when it's going to break, so you cannot just sit there and risk everything out. So I usually trade this level just once. And the second time, if I see like equal highs and I see the lows there fail to break, I will not trade it. So in this case, this is liquidity. The market broke this low, this highs to the upside, took their money, then swept it down to the downside. Do you see impulse? Can you see impulse? This is the 15-minute chart on the Euro JPY. Can you see impulse? Look at this move, this drive is massive. When I see this in the market, I just be like, okay, but sellers are in the market and I want to sell. I want to be selling when the big boys are selling because you cannot compete against them. These are a bunch of smart people. You feel me? They have billions of dollars in these markets. You have just pennies, so follow them. Don't try to beat them. So right now, we have this market being pushed to the downside, changing character to the downside, letting me know that there's more bearish than bullish in this market right now. So where's my key level? This is my resistance up here. If the market pulls back in there, I'm selling this market down. 1:2, and I'm out. However, if this market has to rally all the way down here, I'm not just going to miss out on all of this move, guys. Don't get it wrong, okay? Don't get it twisted. I get out of here, I secure my bag. I just bag the money and keep it first. My team and I, we just, flex on that one for now. Then what we are looking for after that is for this to happen. The market to do something like this. Bam, break it. Bam, pull back. Bam, break it. Bam, pull back. Bam, walk its way down. And we're still going to be taking trades inside these price legs. How? Just like I explained, 50% look for key level, 50% look for key levels. And that's how we're going to do it. We're going to take this thing down. It's just that simple. Break, retest, bam. Okay? I've spoken a lot, guys. I don't know, my tummy hurts. So you should, and by the way, excuse my language. I told you I'm from a country where we speak both English and French. So my English is not really the best. So I hope you enjoyed this content. I really do. Like I told you, if you're lazy enough to not follow all this stuff or you cannot understand all of these things, please just go to the paid side of this whole thing. Sit on your ass. You just have to hold your phone, and when I be like sell, you sell, okay? You just do what I do if you want to risk it all. So it's not perfect trade. It's not like I make millions of dollars in the market. No, I don't. I take losses as well. So you can risk it all. Do subscribe. Consider subscribing to this channel. I'm new to YouTube, okay? I started like a month ago and I've getting a lot of massive loves and appreciation from you guys, and I really appreciate your support. Peace.